Pay attention, watch closely as things unfold, because I sense we are going to be seeing more of a drop. Take a look at the sentiment here. You see the coloration of the cells? Long percentage, short percentage. Look at the coloration, okay? Look what it's turning, red, okay? It's just starting to turn red. We're probably going to see more red. How's it going, fellow traders? It's Magic Trader here, and this is your CFTC report for the data that was reported on August 15, 2023. Welcome back, welcome back. Nice to have you. Glad that you joined us. Let's look at the CFTC data that was just recently reported. Here's the positions held by the institutions as of August 15. Let's start by taking a look at gold, shall we? And so take a look at gold. What do we have? Wow, wow, wow. Look at shorts increasing 74, 85, 111. That's pretty aggressive. As they've been reducing their long positions, they're getting into aggressive positions with their shorts. And this took place as price was declining right here. Okay? There you have it. So price is declining. This is what we've been talking about, right? Remember, right here, when the euro US dollars was reaching a maximum size long position, I told you that they're going to have to start taking profits, and that was going to fuel a move to the downside. And take a look now, okay? That is the move that's been fueled to the downside. So now we see them increasing their shorts, 74, 85, 111. Pretty aggressive, you know? We probably have more downside to go, and that's what we're watching for. So pay attention, watch closely as things unfold, because I sense we are going to be seeing more of a drop. Take a look at the sentiment here. You see the coloration of the cells? Long percentage, short percentage. Look at the coloration, okay? Look what it's turning, red, okay? It's just starting to turn red. We're probably going to see more red as the numbers continue to unfold. So continue watching, ladies and gents, and we'll see what happens. If you look at retail positions, we can see they're about 52% long, okay? 52% long. Okay, let's move along and take a look at oil. What do we have with oil? Big rally that took place recently from the institutional demand area here that we had mapped out. Push to the upside, falling short of hitting supply that we have on the weekly chart, and it's stalling, okay? If we look at their positions, we can see a little bit of an increase from July 25th's numbers, 350, 363, 378, and now recently they're taking some profits on those long positions. Look at shorts, very cooled off. You think they're focused on shorts right now? Absolutely not. Let's look at the coloration here. They were bearish, turning a little bit more bullish, and that's what we're seeing here. But this is not a chart that I'd like to be trading right now, because there's no specific trends to the upside and so forth, so it makes it a lower odds chart to trade. Let's take a look at the dollar. The dollar's been rallying, but remember, the dollar is only rallying because the euro was dropping. But here's the interesting thing. We went from bullish sentiment to now somewhat bearish sentiment. Do you see that? That bearish sentiment kicking in here? Interesting, right? Well, if we take a look at short positions, what do we see? That they've been increasing them. Look, okay? Ever since mid-June, early June, they were very cooled off. All of a sudden, boom, they became aggressive with their short positions. So the last few weeks, aggressive with shorts as price is rallying. So what is happening here? Hard to say, because if we look at longs, what do we see? Very cooled off. Positions have been cooled off for quite some time. Most of 2023, their longs have been cooled off, right? All of this trading that we see here on the chart, their longs have been cooled off. And just now they're starting to add to their short positions. Now remember, I've always been saying that I think what's dictating price action here is the euro, all right? It's what the banks are doing with the euro. So we got to stay focused on what we see with the euro, and we take it day by day with that. Okay, boom, let's go. Let's move on, and let's go to the Aussie. Look at the Aussie, look at the shorts, 122,000. This is all-time maximum, largest position the banks have ever held, the non-commercial side, in short positions, 122,000, okay? And this is taking place right here as price is dropping. Right here, 122,000. Now remember, for quite some time, the banks have been just adding and taking off short positions. So seeing that they're at max position doesn't really give us much insight, because what typically happens is that when they close off their shorts, look at May 30th right here, end of May right here. What happened? A spike up because they reduced their short positions. So is there a possibility of a spike up here like this? Yes, there's a possibility. But does that mean that we're going to see a longer term move like that? No, it doesn't. Okay? So what does this tell us? What does this tell us? This tells us that there's probably going to be a short-term move to the upside, probably not going to be sustained, and then when they start piling in shorts again, we'll see a bigger drop to the downside, because this is what they've been doing all year, over and over again. They've been doing the same thing, okay? Retail traders. What do you think they're doing? They're 77% long, okay? Investors and traders are 77% of their positions are geared to the long side as price is dropping. If this number gets more aggressive, oh yeah, I think they're going to start to close off those long positions. And then we'll see the banks come in and make that push to the upside. So be aware. If you're trading the Aussie, be aware of this move to come. It likely will come. USDCAD. So we looked at how price dropped down into this demand area. I said pressure to the upside, and look what we had. From 131 to 135. Massive move, okay? But here's the very interesting thing. When we look at the coloration of the sells up until mid-June, very bullish, okay? And now look what's taking place ever since then. Bum, ba-dum, bum, neutral, okay? Sentiment has been neutral. Why is it no longer bullish? Well, because they reduced their long positions quite aggressively from 61,000 all the way down to 30,000. They cut it in half. It's only this past week we see that they increased them again from 30,000 to 48,000. All right, so what's been helping fuel this move to the upside? The closure of short positions. So this is not the type of situation I'd like to trade personally, because it's not high odds. What we're seeing here is not high odds. A move to the upside, move to the downside, anything can really take place. All right. Remember, this is being fueled by a move to the upside in the dollar, which is being fueled by a move to the downside in the euro. That is the main thing you got to take away from all this. All right. Everything else is just in the background. So let's take a look at the US Swiss. Oh, we forgot to do something, didn't we? Aren't you curious about their positions? I sure am. USDCAD. 93% of investors and traders are short as price has been going up. See, if they would have been tracking and tracing everything we've been talking about, they would not even think about going short. But they went short at the lows when price was contacting an institutional demand area. Terrible. Feel horrible for them, but they should be following us and getting our newsletters. www.whiteoakfx.com. All right, so let's move on. What do we have? US Swiss. Shorts and longs are cooled off, right? We have nothing to see there. And then we take a look at the sentiment. What do you see? Cooled off. So with shorts cooled off, with longs cooled off, should you be taking a position on this one? No, you shouldn't. All right. Short-term move to the upside. It could die at any moment. We don't know how long it's going to last, but it's not expected to do anything extravagant. Again, what are investors doing? 67% of their positions are to the long side. Okay, 67% to the long side. So it doesn't look like they're doing too horribly with this, because it's been stair-stepping all the way up all this time. Now take a look at this baby. Euro US dollar. Remember when we were at 264, I said watch for the closure of positions, fueling a move to the upside, or downside I should say, and what did we have? A move to the downside, fueled by profit taking. Exactly what I told you. So hopefully you guys didn't take any long positions, because that would have been disastrous. Leave in the comments down below. Let me know. Did I save you from getting into a long position? I want to know. Alright, I hope I did. Now let's take a look at what we see here. Coloration of the cells here. Sentiment, bullish. Yes, okay, because they have been bullish. That's how they got their long positions to a record 264,000. Well, just shy of the record, but you know what I'm saying. Shorts are not their focus, so do you think you should be shorting? No. Short-term shorts were okay. We had some short-term shorting opportunities, but that's not the way that you want to trade longer term on this one. Okay? So what do we have when we look at the euro? 61% of investors are not short, long. 61% are long. Of course, as price is dropping, right? But here's the deal. I told you retail traders were going to be lured into taking the long positions off the banks, correct? And that's what happened, because we saw them increasing. We saw investors increasing their long exposure. Now they're starting to close off those longs and go into shorts because of this drastic move that took place here. Okay? Remember, we used to be up here. Boom, big drop. So now they're starting to close off their shorts. Investors are starting to think, ooh, maybe we're not going to be going higher. So now this opens up for a possibility of seeing a move to the upside. Why? Because as they get offload their long positions, they'll start getting into short positions, and the banks at that point want to push price to the upside so they can get them to shake off their shorts and then get them to want to buy again. Because again, the bankers need to offload what? Their long positions. So how are they going to do that? And unless they get investors to take those positions off of them. All right? And that is how that works, ladies and gents. Now let's move over to the pound. I told you the pound was going to drop. I told you 135,000 was their max. Then they start taking profits, and that's exactly what took place. Move to the downside. Are they focusing on the shorts? No. The shorts are cooled off. Sentiment is bullish, but they're in the process of taking profits on long positions. So we don't want to be trading this one at this time. Pound, 54% of traders are short. I think they're getting in short now, and we'll start piling into more shorts, and then we'll probably see a little push to the upside, just like what we were talking about on the euro. So be careful for that, because I'm smelling it. The US dollar, Japanese yen, look, didn't I say they were going to take profits on those long positions? And they sure did. Okay, they sure did, and it caused this drop in price down here. Now we see some bullish action. And what do we see with the positions? Increasing 106 to 115. 115. Now remember, longs are, or long short exposure is green. Bullish. Bullish. But take a look at net positions. Decreasing. Okay? Decreasing. Another thing I'll point out to you is we still have supply in play. So when supply is in play, you never know what's going to happen. Likely price is going to drop unless it gets removed. If it doesn't get removed, we expect price to drop. And it's just that simple. All right, investors, what are they up to? They're about 74% of their exposure to the short side as price is rallying. Horrible. Horrible. Why the heck are they getting in short when the banks are taking profits on longs and they start to add back in? Terrible. All right, again, they're not members here. They're not following these videos. So please like and share so we can spread the word. Stop traders from losing. All right, let's get to Kiwi. Increasing longs, 15, 18, 21,000 as price is declining, but they're also increasing their shorts, 13, 19, 24, 24,000. Pretty aggressive. Bottom line, though, if you take a look at their coloration here, it's somewhat mixed. Red, blue, all over the place. Not good for trading. So I stay out. It's not something I want to trade. Investors are 84% long as price is dropping. Again, terrible. Terrible. Shouldn't be going long. The pressure was to the downside because of the euro. But this is how it goes. Alright, that's it, ladies and gents. Hope you enjoyed this session. If you did, leave me your comments below. Let me know how you're using this information to better your trading. And if you want to escalate it even further and you're not a member, now's the time to become a member, because soon we're going to be increasing our prices. We're going to be offering lessons, levels 1, 2, 3, all in one package very, very soon, so wait for that. The price will be a little bit more expensive, but if you want to lock in your price right now, you can gain access to level 1 here at the school, whiteoakfx.com. It's $125 a month, but your first 3 months is a special $175. You're going to learn really how to trade the markets, how the markets actually move. I know some people probably tell you that in their advertising, but we're legitimate. As you can tell from these sessions that we do for free, you can see how accurate our analysis is. So, hope you join. Would love to have you. And that's it. Take care of yourself. Take care of everybody else that you love. And we will see you soon. Take care and have a good one. So long.